Hey everyone, Nvidia's stock price has had an absolutely phenomenal year in 2023, but could that trend continue? I see a lot of investors asking where could Nvidia's stock price be next year and the year after that. So I'm going to take a look at that question on a 2-year perspective. I'm going to answer where I think Nvidia's stock price could be by the end of 2025. Now, to answer that question, I'm going to look at Nvidia's performance, Nvidia's characteristics, the earnings per share estimates, and the valuation multiple, and put all of that data together to come up with my estimate for what I think or where I think Nvidia's stock price could be by the end of 2025. So let's get into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So I mentioned that Nvidia's stock price has had an excellent year in 2023. Look at that strong uptrend here. But it's not only been 2023. You could go back further and you can see Nvidia's stock price has absolutely soared over the years. And it's been volatile as well, with several large pullbacks, notably one in 2019. There was another one here in 2022. And some investors think there's another one due for Nvidia since it's had such a quick upswing here in price. But my argument is that Nvidia's upswing in price has been justified by its performance. It hasn't been all hype based. Some stocks in the market have increased based on hype and other factors not relating to its fundamental performance. But Nvidia has been one that has performed well and has seen itself be rewarded for the good performance. And I'll show you just what I mean. So Nvidia's trailing 12-month revenue, you can see just how much it has increased over the years from, let's say, 12 billion in 2019 all the way up to 44.87 billion in the most recent trailing 12-month period, which ended about a month and a half ago. So you can see the revenue growth has increased substantially over the years. And that's also been coupled with strong cash flow from operations. So it's not like Nvidia is just generating sales while at the same time losing money, cash going away from the business. That hasn't been the case. Nvidia has generated strong cash flow from operations that has improved. In the most recent trailing 12-month period, a CFO to sales rate of 42%. That's an excellent ratio of cash flow from operations to sales. That means for every $100 in sales that Nvidia generates, it makes $42 in cash. $100 in sales turns into $42 in cash. That's an excellent number. Those of you that run small businesses can understand how hard that is to accomplish and how difficult this is. In fact, out of all publicly traded companies, relatively few of them have any cash flow from operations to sales ratios above 35%. Additionally, Nvidia has demonstrated strong economies in scale. Economies in scale is one of the most desirable characteristics you can find in an investment. In the example I have created here, sales grow from 100 in year 1 to $115.76 in year 4, while net income more than doubles from $4.50 to $9.47 in year 4. This company demonstrates economies in scale. As its revenue grows, its profits grow by a larger magnitude. Not every company can achieve this kind of effective growth. Here's how it works. This is a typical categorization of an income statement of a publicly traded company. Cost of goods sold is what's called a variable expense. That means cost of goods sold is connected to sales. Other expenses like interest, general and admin, and depreciation are not connected to sales. You can see here depreciation stays the same at 25 whether sales increase or not. The same is true for interest expense. It stays the same whether sales grows or not. You can understand your interest payments do not increase when your sales increase. Overall, businesses typically have a mixture of fixed expenses that are unrelated to sales and variable expenses that are. When sales increase, the business leverages those fixed expenses, as we see in this example, and profits grow by a larger magnitude than the increase in sales. That being said, look at the actual number here, growing from a little over 10% in 2015 all the way up to 45.94% in the most recent period. That's a demonstration of economies in scale. Investors are willing to pay up for companies that demonstrate this characteristic. So looking forward, Nvidia is expected to grow revenue at 56.5% next year and 17.5% the year after that, with earnings per share growing 66% next year and then 16% the year after that. All in all, the earnings per share are expected to reach $23.76 in the fiscal year that ends January 2026, or you could think of it as a couple of years from now, the performance in 2025, because it's the year that ends in January 2026, so it consists of the results that happen in 2025. $23.76 earnings per share estimate. Keep this number in mind when I show you this next estimation here. Also, let's keep this number in mind. Nvidia is trading at an price to earnings ratio of 64.63, which is about the average it has traded for going back until 2019. You can see it has traded for more expensive valuations, and it's also traded at cheaper valuations, but on average it's traded at about a PE of 64.63. So let's keep that in mind along with the earnings per share estimate for 2025. All right, so here I have in this column Nvidia's earnings per share estimate for 2025 at $23.76. Here I have the current price to earnings ratio, 64.63. So if you multiply the earnings per share with the price to earnings ratio, that would indicate Nvidia's stock price will be $1,536 by the end of 2025, or near the end of 2025. That would be triple where it is today at around $500 per share. Surprising, isn't it, to see this estimate play out over the next 2 years. But let's say you think the 64.63 price to earnings ratio is too expensive and it's unrealistic that Nvidia will trade at this valuation 2 years from now and that multiple is going to come down. Okay, let's test that out as well. Let's look at it at a price to earnings of 50 and use the same earnings per share estimate at a price to earnings of 50. That would indicate the stock price will be $1,188 by the end of 2025 or the start of 2026. Still more than double where it is today. And finally, let's say you think even 50 is too much of an optimistic forecast, that you think it should be trading more at a price to earnings of 40. Okay, let's test that now. The 40 times the earnings per share estimate of 23.76 will give us a market price estimate of $950 by the end or near the beginning of 2026 or the end of 2025. So according to these estimates, according to these available numbers, analyst estimates, and price to earnings valuation multiples, it suggests that Nvidia's stock price is going to be roughly double where it is today 2 years from now. Now, there's a lot of risk incorporated with that estimation, right? We're using a lot of assumption here. This is an assumption, the $23.76 earnings per share estimate. That's an assumption. There is no guarantee that's the earnings per share the company will have. It's just an estimate among analysts. And then the price to earnings. There is no guarantee it's going to be 64, 50, or 40. It could be even lower than that. What if it's at only 20? And if we were to calculate that, the 20 times earnings per share with the estimate, that would indicate the stock price would be $475 in 2 years, slightly less than where it's at today. So depending on what plays out over the next couple of years could change the stock price, but according to consensus estimates, Nvidia's stock price is going to be higher a couple of years from now. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.